Hey, it's Ryan from the Option Income Advisor, and today I'm going to talk to you about a stock that is very polarizing. It's a stock that you can't say anything negative about. It's a stock that, I've been writing about stocks for the better part of a decade, and anytime I've ever mentioned something remotely not positive about this stock, you get severe backlash. You get trolled. You get told that you're un-American. I'm talking about the one and only Apple. No, I kid, but it's a stock that is always on our radar. Obviously, it's a for the triple income wheel. You always want stocks that are good stocks, right? And I don't think anyone can deny that just the power and scale and ecosystem that Apple has just makes it a phenomenal stock. And it's been repriced even over the last couple of years, where it used to be a hardware company, now it's a services company. So when you look at valuation, it's even difficult to say, is it a good value, is it a bad? I don't know, because we're revaluing it now. We talk about Apple in a whole different light. And so Apple hit a new all-time high on Friday. Okay, so we hit 145. And so the question I've got a lot just kind of this week is there a play on Apple? Like can we write some puts on Apple? Can we start the wheel on Apple at this level? And so listen to this video, because I've got some polarizing discussion on it, because I could see it going both ways, right? There's a few factors just from the economy, interest rate standpoint that I think affect this just global cyclical versus large cap growth type situation, and I think it's something you want to be aware of if you're going to run the wheel on it. But I'll talk about levels. I'm going to talk about levels that I think are appropriate, and then I'll talk a little bit about where I think Apple could potentially go. So this is not a discussion about whether you should short Apple, whether you should sell it. This is strictly a conversation about what should we do as triple income wheel investors. It's obviously it's on our list of stocks that we should always be looking at for opportunities. I've actually written multiple puts on Apple this year and been successful. So the question is, can we keep the wheel going? What levels do we need to worry about on the downside? And that's what I'm going to try to cover today. And then again, if you own Apple stock, let's maybe look at some covered calls that make sense, because I think writing covered calls at this level could be a significant income generator too, if you're not already doing it. And so that's what I'm going to cover today. I'm going to first talk about the chart, and so let me pull up the chart that I've got for us, and there we are. Okay, so we got the chart. So this is kind of a long-term, significant long-term uptrend, right? I mean, this is what you want to see out of a stock. I mean, if you've got a stock that's got this kind of uptrend, I mean, you clearly just ride it, and you love what you've achieved and love what you've gotten over the last looks like over this is basically since what is this, 18 months, right? So it's got the pandemic low, and then you're just clearly just rocking higher, rightly so, right? I mean, this has been an extremely important stock during the pandemic. You can argue that they've pulled some earnings forward, but it's the stable stock that you'd want in the heart of a pandemic, right? It's a product that people can't go without. It's a product that people were adding to their product library throughout, and so this is not surprising that you see something like this. So we hit an all-time high. This was like kind of late January, right? And we had a little sell off in the market, kind of like a tech kind of correction, and so it pulled back from about 145 down to about the 120 level, right? So that is roughly 18% drop. And keep in mind, Apple's had as many cheerleaders as Apple has. Apple's had, I think, 5 different 30% pullbacks just in recent years. So it's a stock that does have significant pullbacks. As stable as it is, it's certainly a stock that still at times trades like a high risk tech stock. At times. So, this was kind of a run in the mill pullback. We stabilized there and kind of trade in the range, and now just Friday we hit an all-time high again, right? And so the question is this a real breakout? Is this a breakout that's got legs, or is this something that's going to start pulling back down into the bottom half of this range, right? And so we've got several different, I think, support levels here, and I'll just kind of highlight a few of them there for you. So we've got both the 50-day and 200-day moving average. And by the way, this uptrend again, where you've got the 50-day moving average, it's been above the 200-day moving average for the better part of 2 years, right? And so that is just a very strong uptrend. But you can see they've narrowed a little bit, and it's kind of converging a little bit. And so you've got the blue line here is right around 130. So you've got a 130 support level. I think that'll be your first level of support. Sometimes it takes a while to break through that 50-day moving average. But then you've got just right behind it, probably right around 126 here, you've got the 200-day moving average. So within kind of a $4 range, which Apple can move that in a day, you've got 2 pretty significant support levels just from a technical standpoint, right? These are simple moving averages, but they become, I think, kind of significant support levels, certainly in stocks that are in uptrends. And then you've got this kind of low from, when the last sell-off we had, kind of in that, 120 range. So I would say between 130 and 120, you've got 3 pretty decent levels of support there. So those are the areas I'm looking at, and we'll get to some information here just to kind of back some of that up. But that would be kind of the level that I would be interested in potentially writing a cash secured put, right? And so we'll look at some opportunities to see is that even available for us right now? Can we write a put in the strike zone, if you will? And that's the big question we always have when we want to start a trade on a stock. So let's take a look at the profile here, and just briefly, this is a stock that it's a low dividend payer, but I think it's always on people's mind that eventually it's going to be the best dividend payer in the world. But right now it pays under 1% dividend, so it's expected that it has a low dividend ranking. Safety, again, given its business model, given how consistent it's been, not a surprise that it ranks high. Value is one of those things where, again, based on historical valuations, I mean, this thing's crazy overvalued. But again, we've kind of massaged and adjusted how we view Apple, and I think a lot of it is valid, right? I mean, you've got a company that used to be all hardware. Now we've got a bunch of recurring services. It should carry a higher multiple, right? So we're kind of in this new realm where you can't really compare their old valuation to their new valuation, and so it's really tough to say is it overvalued or not, right? And that's the big $1 million question with Apple, right? Is what's its valuation? But this is saying low, and I'll show you why, right? When you compare it to its historical valuations, it's extremely overvalued. But I think there's a case to be made, like I said, of it not necessarily being as overvalued as it seems. So the strike zone we're looking at, and this is what I love to see, we just looked at the support levels on the chart, right? It was between 120 and 130. And so if we look at our strike zone, which again is calculated in a totally different manner, right? It really doesn't take a look at the support levels per se, But what it does take a look at is, volatility risk profile of this stock. It looks at the how much it's pulled back, and then it looks at whether or not we have earnings risk coming up, because that's how we get to this required margin of safety, which is this 8.5%. So right now we're requiring at least an 8.5% margin of safety on this stock to get us to this high end of the strike zone, right, to this 133 level. And then, again, just based on volatility and some other factors that we look at, we've created this range of 119 to 133. So this is the range that we feel like is probably a good area to write a cash secured put, right? That's the strike zone. That's the strike price we want to write, that level that we want to write. And so that's what we're targeting. So when we go down and look at our cash secured put analysis, this is the strike zone that we're targeting. So a couple other things just to point out before we get down there. It's obviously extremely liquid stock. Gotta love that. Love that for the triple income. And then we've got the mean, again, implied volatility, pretty low. I mean, compared to most technology stocks, it's in the 27 range. But I will point out that the open interest put call ratio is actually pretty low, which means there's a lot more calls out there than puts. And so when you think about that's just has this bullish kind of nature behind it still. And so this is one aspect that kind of makes me think, well, if we don't get a big move in interest rates, and I'm going to show you an important chart here in a second. If we don't get a big move in interest rates, this stock could actually go higher. So I pointed out all the levels that I think this stock could go down to, but all else being equal over the short term, if we don't get a big spike in interest rates, this stock could certainly go higher, and that's probably music to your ears if you're holding Apple. But let's take a quick look at. I'll show you this valuation summary real fast. So this is what I was talking about. So, when you look at Apple, you look at these 5-year historical averages. Well, I mean, this thing traded at like a 12 PE for the longest time, right? So in hindsight's 2020, but you could look back there and say it was completely undervalued based on the prospects of the business, right? But when people look at valuation, one of the main metrics they look at is how is this thing trading compared to how it has historically, and does that make sense? And so it doesn't really make sense right now. The comparisons aren't great, right? And so because if you look over here, I mean, we're looking at on a current basis, the PE ratio is, in the 30, above 30, enterprise value to EBITDA, again, pretty high. That's cash flow multiple. Price to sales, again, very high compared to historical. But when you look on a forward basis, doesn't look as bad, but still, I mean, you're still much, much higher than your 5-year historical averages. Now this one seems a lot more reasonable to me. I mean, when I think about, what Apple is as a company, and I look at it as a 27 PE, doesn't seem that bad to me, obviously, but it's rich in the valuation realm, certainly compared to historicals. So time will tell. That's the only thing I'd say about Apple's valuation is time will tell whether or not this is a good or bad valuation for Apple. But what you can look at is just this unbelievable earnings growth that's been very consistent. Obviously, we've probably had a pull forward here. We're looking at an EPS in 2021 of just over $5 a share. But then you look at estimates for 2022 and 2023, and you don't see this kind of trajectory, but you definitely see it leveling out. And so if it levels out at this level at in the $5, $5.25, $5.50 range, which is kind of the expectations for 2022 and 2023, you still are looking at a reasonably valued stock, probably, right, from just that forward multiple standpoint. So let's go ahead and take a look and see what we've got here. So again, we got earnings coming up, so you can see pretty much all of these options have the EPS risk highlighted here. And Apple's one that you could trade, the weeklies on. But again, I always like to trade the monthlies just because they tend to be more liquid, and it just helps me stick with the strategy. You know what I mean? If I've got different weeklies going on at all different times, and it's not to say I won't take advantage of weeklies from time to time, but it helps me stay organized when I've got 30, 40 positions on, when I know I've got these roll-off dates. And quite frankly, I think over time it kind of works out. If you write a bunch of short-term options, sometimes just writing the longer term, and by longer term I say, it's like 30, 45 days. By writing that longer term instead of say a 7 or 10 day, you can get just about the same premium. So, and usually a better margin of safety. So let's take a look at these August options here. And so you can see only one of these is in the strike zone. And I think part of it is that these puts are just not, that they're probably undervalued, right? But there's an upward bias to this stock, and that's just the reality of it. And so if we look at this one in the strike zone at the 130 level, which again that was that top point that we saw that you would been our first level of support, the 50-day moving average. That's where that is. So this is saying, we'd only get a 0.5% if we went down that low, which is about a 10% margin of safety, and it's a 14 delta, right? So the delta is saying there's a potential probability of it finishing below 130 only at 14%, and that's even given earnings, right? So that's obviously pretty low. And so when we're targeting our base kind of strategy, we're looking at least 1%. So this 135 helps us get there. We've got a 7% margin of safety and a 22 delta. So I like that risk reward a lot. 20, something under a 25 delta with a 1% on Apple, even though it is at all-time highs right now, I think is pretty reasonable given the kind of support levels we saw, right? And so when I look at this, we can get almost $2 a share, right? And so our break-even price, if we were forced to buy Apple, which again wouldn't be a bad thing longer term, and that's the whole analysis we do with the triple income wheel. It's got to be a stock we like to own. So our average price will be about 133, and remember our high end of our strike zone is 133. So that makes me feel comfortable, right? I can get into an option that gets me 1% a month. It's got a decent margin of safety, decent level delta, and I'm getting a cost basis in my strike zone, right? And so I think this stock, again, just to kind of sum it all up, this will be our base right here. If you want to get aggressive with it, you could go with the 140, and then again the conservative. This is a great conservative level. I love this all day. If you're being conservative with your option plays or using margin, getting this 0.6% for this risk reward, I think is phenomenal. So that's our aggressive base and conservative levels for Apple right now. So the answer to the question at the beginning was, can we do the wheel on Apple today? Absolutely, right? It's at an all-time high, yes, but I think the risk reward makes sense right now. And one thing I will just point out, and I told you I would, let's get rid of this. We've got this chart, okay? So this is the one thing that could keep Apple from breaking out to a new high, but it would have to happen in the short term, right? And this is something that could also cause Apple to go, well below our strike price. So this is in my mind our biggest risk with Apple right now. And so what we're looking at here is the Apple price versus the 10-year Treasury rate. And so you can see just basically in the last 3 or 4 months, we start having this crazy inverted relationship, and basically what it's saying is that these large cap tech growth stocks that have all this great cash flow, well, as interest rates go up, the value of that cash flow comes down, right, from a discounted cash flow method situation. So it's basically saying that when interest rates rise, these cash flows aren't worth as much as they would be at lower interest rates. And so all of these stocks that are at valuations like Apple is are now pulling back when interest rates go up. And so you can see the last time Apple hit 120, which again, it's this blue line right here. So this was the peak in January, and it sold off. Okay, so we hit right here, right? So this is kind of where that inflection point kind of started. But what I'll show you is right here. So when Apple sold off right here, this is when interest rates were going up, right? And again, when Apple sold off right here, look what was going on with interest rates. Interest rates are going up. Apple sold off. And what's going on right here recently? Well, interest rates have actually been selling off since the Fed meeting, which is, I think, surprising a lot of people. And you look what's happening to Apple, right? So this is probably the most important chart that you can find on Apple, right? And so this is one thing you have to watch. You have to watch this relationship between Apple price and I'd say the market in general, right? Because Apple is driving the market and the 10-year Treasury rate. So I think if we do get a spike in interest rates, right, you're going to see Apple come down. And I wouldn't be surprised if Apple came all the way down to this, 120 level at some point. Do I think it's going to happen in the next 40 days? Probably not. But this is something that you should pay attention to for the next 12 to 18 months because this dynamic will come into play. Now, if we don't get a huge spike, I think just in normal course, if the market stays strong, I think Apple could break out here and go a little bit higher, maybe even up into the 160 level, which again would be fine for our puts. And so that's one thing that you need to look at. So that's our trade on Apple. Hopefully this has been helpful, just kind of walking through that process. It's a stock that everyone wants to transact in, everyone wants to trade in. It's a very liquid stock. It's a fun stock to be trading just because it has so much press around it and so much love behind it. So I'd say you're safe to probably trade the triple income wheel right now on Apple going into earnings, and just be cautious of again the 10-year Treasury rate and kind of what it's doing. So take care, everyone.